So very good morning everyone. So very good morning. So in the last class we started with one very important chapter, has given an introduction to that as well. The name of the chapter is Financial Statements Analysis. In that the first part we started with the name called as Ratios Analysis. So we started with the topic called as Ratios Analysis in the last class. In the today's session we are going to start with the problems as well. First let us understand what are all the types of ratios, how many kinds, how the questions will come in exam. Slowly we can progress into the understanding of problems as well. Shall we begin? And it's a safe chapter because it's like a understanding the formula, its interpretation and applying the numbers. Time value of money will not involve anywhere. I told you the reason as well why discounting compounding will not be there. Here we are not doing any futuristic analysis. We are taking the past information, analyzing those numbers. Am I clear? So therefore there is no concept of intervening of time value of money into ratios analysis chapter. Okay, more common sense based chapter. We will be seeing practical situations as well in this. So one by one let us move on and do the problems. But before even going into that, why ratios analysis? I told you the other day why we have to do. How a company's health is, whether its health is good or bad or worst, or whether it is performing fairly, we can understand only by calculating certain ratios. It's a diagnosis report or a statement of a particular company. How a health status of a person can be understood using the diagnosis test made by a center. Here chartered accountants will do ratios analysis. These ratios will give a picture about as to how the health of a company is, whether a company is performing good or bad. We can understand using the ratios. Shall we begin? So many ratios we will come across. Okay, there will be somewhere around 35 40 types will be there. Once you understand all those 30 35 or 40, then you can be pretty sure that any question comes in exam you will be able to solve. And next one, in accounts there will be a concept called as a single entry system. What is the name of the concept? Single entry system means what? For example, I sold goods to her, cash basis. When I am selling on cash, I don't need the name of a person. Correct? When I need the name of a person, when I am making credit sale, I want who she is. When I am making on a cash, to whom I will sell, why there is a need. Are you understanding or not? So I sold goods to her. What entry we will write in books of account? Cash account debtor to sales. Cash account debtor to, that means it's called as a cash sales. Means I sold goods on cash to a person. Over. Game over. That's all. So I am selling goods on cash. Answer over. This is the accounting entry we will write. Cash account debtor to sales. Single entry they don't write like that. Listening? They will give entry to the effect of only one book. Either they will write in the sales or they will write in the cash. How they will write in the cash book? Cash book they will write that sale of goods worth 5,000 rupees. That's all. Anyway, sale of goods I am writing there na. Then it is an indication that okay, this cash has come because of making a sale. Separate account called as sales will not be there. Listening? Okay. At least this will they follow consistently? No. I sold goods also to her. Now I will write in the sales register but not in the cash. I will write sale made to so and so person or sale made worth 5,000. Now I will write in the sales book. Listening? That means I will maintain 2-3 books, that's all. One cash book, another sales, 3 purchases, over. Sometimes I will write in cash account. Sometimes I will write in sales account. Sometimes I will write in the purchases account. That's all over. This is how single entry system will be. Listening everyone? Double entry system means what? For every debit there should be a opposite credit. We need to create that credit now. That means cash of 5,000 has come. What I have written? Sale to so and so person or sale worth 5,000 I have written. Cash book you are writing as an inflow. But in the sales register you didn't show anything. Now I will prepare a sales account and give the adjustment or effect also there. Listening? This is how we have to do. During the course of doing this, they will be giving some hints to you. Single entry system means double entry effect is given or not given? Answer. Not given. Okay, not given. But what hint they will give, I will explain. Shall we continue? Yes, they will tell, we don't know the amount of sales. We don't know the how much sales we made, we don't know. He has just written cash, 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 like that he has written. Actually, which is sale, which is purchase, we don't know. Listening everyone? They will give you a hint in the question. What they will give? Gross profit to the sales is 20%. They will give a hint. Ratio. Gross profit to the sales is how much? 20%. It's an indication that gross profit will be 20% of the sale. Sale not there, but gross profit amount we know. What we will do immediately? GP by sales equal to 20. Listening? You know the GP value, profit value, you know. Immediately what you will do? Missing figure will be sales. Like that you will calculate in this chapter. Ratios analysis chapter is not just a ratios analysis. We also will fill the double entry system of accounting. That means when the books are incomplete, we will complete using ratios chapter. That's one very famous area in exam. Last attempt also 10 marks question came from that only. Filling the missing gaps. Filling the gaps is the 10 marks question given in exam. Last attempt, very recent attempt, 10 marks question came from the ratios chapter, came from that. Gap filling concept. Okay. So before even going into that, first point, 3 things we are going to do in this chapter. Number 1, theoretical analysis, understanding the ratios. Second one, doing the problems on performance evaluation, means health status of a company. Third way, filling the gaps. These are the 3 ways in which a question will be tested from this chapter called as ratios analysis. Lot of understanding is required. It's not just like putting some numbers in the formula. There are so many formulae in this chapter, but we should understand the logic behind each and every formula inside. With that, we'll complete this chapter called as a ratios. A very big area, but a good area. A 10 marks question will come from the examination point of view. Shall we begin the chapter ratios? Before going into that, why we calculate ratios? To understand our health status. And second one, to understand where we are when you compare with a competitor. When you compare with a competitor. For example, 2 people are sitting together and studying. One person got 55, one person got 58. Okay. Now 55% can compare with a 58%. He can tell that, 55% can tell that I am not performing than you, I am underperforming than you. You are performing 58 marks, I got only 55. So, I am 3 marks lesser than you. I should also try to reach you. Like that I can compare. Listening everyone in the class? Second one. There is a benchmark. There is a benchmark. Means, to get exemption, you should get how many marks? 60. That's a benchmark. Already set, standard was set by ICAl. If you get 60, it's an exemption mark. Like that they put a standard. Now what I will do, I will compare with that standard now. Okay? I will compare with the standard. Means I got 55. Means I am underperforming than exemption. I got 65 in the internal test. I will say that I am performing better than the standard. There is a standard with which we will compare our marks. Listening? This is called as inter-firm comparison. What it is? Everyone. Inter means beyond. I am comparing me with another outsider. Is called as an inter-firm comparison. Okay. I have written 2 tests. 2 tests. 1 test in last month, 1 test in this month. Last month of the same syllabus, I got 50 marks. Now I got 65 marks. I am performing well. I reduced my performance. I am performing well. I increased my performance. This is called as an intra-firm comparison. What it is called as? Same like this, companies also will compare in 2 ways. Way number 1, they will compare themselves with the market competitor, inter-firm. They will compare their performance in the past with their performance today. That is called as intra-firm. So how many types of comparisons will be there? 2 types. Number 1 will be intra-firm comparison, inter-firm comparison, which is beyond, which is within. That's all. So ratios chapter will be useful for another one important thing, comparison. to comparison how we are performing with the outsider, how we are performing with our past. Listening everyone? So write a small notes on that. Once it is completed, we'll go to the analysis. Write down. Now write down. First, listen. There are two popular ways of comparison, namely intra-firm and inter-firm. In case of intra-firm comparison, we compare current year ratio of the company with the ratios of the last year. I told you just now, our past with our performance today, and interpret accordingly. On the other hand, in case of inter-firm comparison, we compare ratio of our company with ratio of another company doing similar business, also called as a competitor. Okay, sometimes comparison can also be a benchmark. Just now I told you, exemption is not given by any person. It's a benchmark number. You can also test with the benchmarks. So in simple, ratios is a tool to diagnose the financial health of a company. When properly diagnosed, it helps in making necessary improvements. Please write down the notes properly. Completed writing? Second paragraph completed? Completed? Shall we go to the next one? Now we completed understanding what is the need for the ratios analysis. Shall we continue? Now see here. So now we have completed writing the basic notes with regard to the ratios analysis as a chapter. Listen first, everyone brought your study materials? Yes, everyone in the class? Yes, whoever received the study material, did you bring it to the class? Yes, okay. Notes writing, everything you can see and write there, but problems we will do directly from the study material. Okay, such that you will have a clarity as to what you are doing. I suggest, I tell every time, and again I am repeating the same. Prepare only from the institute study materials. Are you understanding or not? Maybe I told you to you or not, I don't know, I didn't remember whether I said to you or not. Recently I had one interview with the Air One. Okay? With that person also I had an interview. In that interview also first I asked that same question. What are the materials from where you prepared? Maybe you might have seen that interview as well. What is the answer given by him? No one will read any other material. Okay? Even when it comes to paper like law, institute study material is a copy paste to the Bare Act. Are you understanding or not? But I suggest read the Bare Act such that institute study material, if you read, they will give in point-wise format for law, which is not a correct way to study. You can study past exam questions and questions answered from the institute. Are you understanding or not? Study material is more than enough for your preparation for all the subjects. Listening. GST also study material is enough. But sometimes GST, the books when it is released and the day in which you write the exam, amendments may come. Listening, at that time those books may become obsolete. But in all other practical cases, more than enough if you prepare the study material. You will get rank A directly, first rank A. So you need not worry about that. So therefore that's why always you can ask the previous batches or this batch anywhere. FMO, all these subjects, absolutely I take only from the study material. Study material, there are 431 problems. What more you need? Are you understanding or not? If you do them properly, you will be 100% confident. Do you know what is a problem? Listen. If I do the problems from other than from the study material, what will happen? I have to bring problems from somewhere else. I will put in a material, 20-25 problems, I will give it to you. You will do. What is the guarantee that you prepared from the study material point of view? How to make interform comparison? Are you understanding or not? Whether you prepared on par with the ICAl standards or not, how would you know? If I bring a private material to the class, I will bring those problems which I am comfortable with. I think you understand the statement properly. I am very much comfortable with the 25 problems. Those 25 will bring to the class. I will do that. I will be comfortable. Doing that, you will become comfortable. What you will think, these are the questions applicable for exams. But reality will be understood when you write the exam. Did you get the point? So therefore, please don't prepare from any book other than ISM, any subject. Listening or not? ISM you should carry, you should read from ISM. Am I clear or not, everyone? So, question banks, all those things I will give. But those are also from the ICA sources. Since you can't spend time going back to the past RTP, MTP, searching for the questions and answers, I am compiling everything in one place. I am not adding any problem which I prepared. I am not deleting any question which institute prepared. Hopefully you understood my point. So this time I am releasing the question banks, charts, books, everything for law and FM as well, both. But everything will be on par with the standards of the ICA. Listening everyone in the class? So therefore please keep your mind present here. Let us start doing the problems. First one, what is the chapter we started with? Ratios analysis is not a chapter. Financial statements analysis. In that first area is ratios analysis. Shall we start doing it? Before even going into that, tell me what are financial statements? Balance sheet, P&L, cash flow statement. So many are there. These three are most important. P&L, balance sheet or balance sheet, P&L and cash flow statement are the three sources of financial statement. Okay? How the format will be? Let's see. See there. I will give time for you to copy. You must copy this because you should know the format. In the recent exams, do you know what they have done? Are you all with me? Yes, in the recent attempt, not this attempt, before, one attempt before this, they asked one question for 12 marks in ratios. Okay? Two questions they asked, 6. Two questions came. First question, they asked a normal question, missing figures filling. Second question, do you know what they asked? They asked, using the figures that you calculated, missing figures you calculated, using that, prepare a P&L and balance sheet for 6 marks. That means not just calculating the numbers, you should also prepare what? P&L and balance sheet. Technically, he is asking entire accounts without entries. Without entries. Journal entries they are not asking. Ledger journal entries. Simply, they have given trial balance missing numbers. And they ask you to calculate using ratios, 6 marks. Using those ratios, numbers will come. Put it in P&L and balance sheet and prepare a balance sheet. Balance sheet tally, ratios are correct. Balance sheet not tally, somewhere biscuit. Understood the concept clearly? Therefore, one should know the format of balance sheet. First I will explain, after that you copy down. Before going into this, can you please tell me what is the schedule number for this? 3. Very good. This is called as a... First, tell me what is the particular number 1? What is the first one? Equity and liabilities. Everyone repeat. What is the first one? Equity and liabilities. In that, totally 4 parts will be there. Mug up those 4. First one, shareholders funds. Second one, share application money pending allotment. Means what? Public issue, whenever you go, you will raise money in 5 installments. Tell all the 5. Application, allotment, first call, second call, final call. I think you remember this concept, right? As per section number 24, subsection number 1, clause number B of the Companies Act, okay, it says that whenever company accepts any application money, it should allot the shares within 60 days. Within how many days, sir? 60 days. In between that 60 days, I accepted application money but not yet allotted. Where I should show them? Here you should show. Understood the point or not? What is the name? Application money pending allotment. That means application money received, but shares are not yet allotted. Allotment will be made today, after 60 days. After 60 days. You want coffee? No? So, allotment will be made immediately after 60 days. 60 days it will be allotted. In the meanwhile, where should I show that? Share application money pending allotment. Listen, I will give you another example. Why I should show like this? Please. Why should I show like this? Why can't I show directly in the shareholders fund? First point number 1. Share application money received. Allotted, not yet allotted. When it will be allotted? I am not asking time. I am asking when event. What event should occur? Listen, I will tell you. 1 second. whenever 90% of the subscription, how much? 90% company wanted to raise 100 crores. At least applications should receive for 90 crores. I want to raise totally I want to raise 100 crores. 90% will be 90 crores. At least I should receive applications for 90 crore. Within how many days? 60 days. Then I will start allotting it. If I don't receive subscription properly, I have to refund back entire amount. Which money I should refund back? Application money. To refund means I have a liability or asset? Liability. That's why liability. Everyone understood the concept clearly? That's why they will show it on share application money pending allotment. It's not a share. It becomes a share in future, but it didn't become. I will refund back. Hello, listening? Yes, if public issue is successful, share application money pending allotment becomes shareholder fund. Yes, if not allotted, share application money pending allotment will be refunded back. It will be going out from the balance sheet. This is only a temporary item for 60 days. Listening everyone in the class? This is the point, sir. Next one, third one. What do you make current liability, non-current? Any liability which should be paid within 12 months is called as what? Current liability. Any liability other than current liability will be non-current liability. Read. First one. Long-term borrowings. 1 year, more than 1 year. More than 1 year. Second one. Deferred tax liability. Net deferred tax liability. This I won't discuss now because in your accounting standard there is one dinosaur called as AS22. Which one? At that time you will get paralysis directly. You enjoy there. Okay, there is one standard called as a deferred tax asset, deferred tax liability. Okay, you enjoy there. What is deferred tax asset, deferred tax liability? I will give you one example only. Okay, income tax depreciation is there. Which one? Depreciation under which act? Section number 32, subsection number 2, class number 1, income tax talks about depreciation. How depreciation is provided under income tax? Only WDV. Only? WDV. Books of accounts, you can use either SLM, you can use either WDV also. Hello, I am talking with you. Yes, sir. Can I use WDV? Yes, can I use SLM? Yes, if you want, but consistency must be there. Because accounting assumptions, one of the accounting assumptions is what? Consistency. If you use something, use it consistently. 1 year WDV, another year SLM, third year points method, fourth year weighted average, fifth year again WDV. Like that you should not do. If you want to follow WDV, consistently follow that. If you want to follow SLM, consistently follow that. Income tax don't allow. Income tax allows only on the basis of WDV. SLM allowed? Not allowed? Everyone, in my books, I am giving depreciation under SLM. Income tax, I am giving effect under WDV. Both depreciations are same or different? Different. Everyone. Different. Why? Sir, I will ask you a question. 15% on 1 lakh. Why you are seeing my face here? 15% on 1 lakh. 15 lakhs, sir. 15% on 1 lakh. 15,000. 1 lakh is the value of asset. Life is 5 years. Tell me SLM. Salvage value 0. 1 lakh divided by 5. How much it is? That also I should tell. How much? 20,000. Now tell me. As per WDV? 15,000. As per SLM? Answer. 20,000. Income tax allows on the basis of? WDV. Companies will allow as per either SLM or WDV. What I am using? SLM. Now tell me. Your profit under Income Tax Act, your profit under Companies Act, both will be same or different? On the difference, tax effects will be given. That's called as a deferred tax liability. For hearing aid, it is worst. Concepts are much more worst. You will see that in accounts. Are you understanding the point or not? Profits calculated as per companies, profits calculated as per income tax, both are same or different? Different. On the difference, a tax liability or asset will come. That's called as a deferred tax asset or a deferred tax liability. About this, we will discuss more in the accounting standard AS22. Okay, seriously, I am telling you, worst standard in accounts. Horrible standard, AS22. So therefore, there you will learn more about it. There are 5 worst standards in accounts. Number 1, AS 15, employee benefits. Second one, AS 22, tax. Okay, next next one, AS 17, segment reporting. Which one? Segment reporting, 17. AS 17, segment reporting. After that, 16, borrowing cost. 16, borrowing cost. Okay. After that, 12, government grants. These are the 5 types. In this, last 2 are also okay, manageable. Horrible things are, first one, employee benefits. Same accounts faculty also will tell, on the day we will talk about it. When he start itself, he will tell that we are preparing from exams point of view, don't ask fully. Because employee benefits original standard is 212 pages. Original standard, if you read fully, 212 pages. Question will come in exam or not come? We don't know. Probability again. Are you understanding or not? Therefore, students generally read, okay, overall basis they will read employee benefits. Next one is taxes on income, AS 22, this one, deferred tax assets and liability. But this is very important for exam. Every attempt one question will come from this. Final. Obviously, when they bring the final to enter, they will ask the same questions again here. Okay, sir, okay. Now tell me, what is the first point? Shareholders funds. Second point, share application money. Third one, non-current liability. And fourth one is what? Current liability. In non-current liability, what is the A? Long-term borrowings. Next one, deferred tax liability. Third one, any other bank loans, etc. Anything, any other thing. Next one, long-term provisions. Long-term provision. Provisions can be of 2 types, short-term, long-term. Next, current liabilities. Non-current over. Now we are coming into current liability. Tell me, what is the first one? Short-term borrowing. Borrowing for 6 months, 7 months, etc. Those will come. Next one, these we call as a creditors. Famously we call them creditors, na? Creditors will come here. Next one, third one, other current liabilities and short-term provisions will come here. Okay. Tell me, what are the 4 parts? Part 1. Part 2. Share application money, share application money pending allotment. Pending allotment. If allotted, what will happen? This will become shareholder fund. If not allotted, what will happen? It will be refunded back. Where we will see this? Companies Act, section number 24 or section number 42. Both will be discussing about the same concept. Listening everyone in the class? Okay. Next, non-current liabilities are discussed, current liability. All this total will be total number 1. But in shareholders funds, we didn't read sub-points inside. Let us see. Number 1, when I say share capital, it is both equity and preference. It is both equity and preference. Okay. Second one, reserves and surplus. I think you know what is a reserves and surplus. In that so many things will come. General reserves, P&L account credit balances. Are you understanding or not? Dividend equalization reserves. So many reserves will be there. All those will come. What is the last one? Money received against the share warrants. Money received against the share warrants. This meaning you will see in Companies Act only, because there is an article number 21 of Companies Act where you will see share warrant concept. In dividends chapter we will get valuation of share warrants. At the time I will discuss. This is not the time, because it takes 1 hour to explain how share warrants actually work. Therefore, just remember as of now, there is a separate chapter for us. At that time we will discuss about it. But before going into that, tell all the 4 parts. Shareholders funds, share application money pending allotment, non-current liabilities, current liabilities. These all will make what? Equity and liabilities. This is a part number 1. Next, part number 2. This is more important for us. Read. What is the first one? What is the second one? Assets. First one is equity and shareholders funds, or equity and liabilities. Next one. Tell me, what are the types? First see the main heading. First one? Second one? That's a lower. There are assets, 2 types only, na? First one is non-current assets. Second one, current assets, over. That's all. 2 assets only will be there. Non-current assets, current assets, gone. But under the current assets, what will come? Let us see. What are the current assets? Current investment. Let me explain the meaning. Current investment means investments which are invested this year, disposed also in the same year. Within 1 year you will dispose, yeah. Sir, for example, what is the date today? 9th. This is 9th of October 2023. 9th October 2023. For example, I invested in the shares today. With an intention to sell within 1 year. Tell me, from here what is the 1 year? 9th October 2024. Correct? But you should remember one thing. In the meanwhile, balance sheet date has come. Everyone. What is the date today? 9th October. Okay. This financial year is 23-24 financial year. Correct? 23-24 financial year closes on 31st March 2024. On the date I sold her, not yet sold her. Not yet sold. I will sell in the August of next year. Listening? That comes under this financial year, next financial year. In this financial year, still investments are there or not? I should show them as a current investment because I am intended to sell in 1 year only. Understood the meaning of current investments now? Next, what is the second one? What is inventory? Stock. You write now closing stock in balance sheet. You should not write closing stock, you should write it as inventories. That's why even in FM there is a chapter called as management of inventory. Inventory management is there, stock management is not there. Stock is different, inventory is different. We are doing inventory management. Listening to my words? Next one, what is the third one? Trade receivables. This is popularly called as debtors in your normal accounting system. What it is? Debtors. Next one, cash and equivalent. Cash, checks, bills, all these put together will be called as cash and equivalents. What is the next one? Short-term loans and advances. This loan and advance is given or taken? Everyone? Given loan, not taken loan. Taken loan comes under liability. Given loan comes under assets. Next one, last one. Other current assets, anything if you find. Okay, other current assets, anything you will write here. We now completed non-current, current. Current. Please tell me the list of all the current assets you learned. One by one. Current investment, inventories, receivables, trade receivables. Next one, cash and equivalents, short-term loans and advances, other current assets. All these put together will become what? Current assets. Very important. Non-current assets. What is this? Non-current assets. What is the first one? Property, plant and equipment. Everyone tell me, what is it? Property, plant and equipment. There is no concept of fixed assets. So don't write. It is called as a PPE. What is PPE? Property, plant, equipment. Okay. Property, plant and equipment. In that three types again. Number one, tangible assets. What do you mean tangible? You can touch, you can see. Those are called as what? Tangible. Which you can't see but it is there. Intangible. Examples of intangible asset? Expect chesa. Exactly will tell the same. Wrong. Goodwill is not an intangible asset. Created goodwill is only intangible asset. Patents, trademarks, copyrights, brands, logos, all these are intangibles. First, anywhere I ask a question, what is goodwill? Very easy for you. Goodwill is not a recognized intangible asset. Are you understanding or not? I will give you three examples. I have a logo. My classes has a logo. That logo is a registered logo. No one can copy that. Okay? Why? It is TM, trademarked.
Yes, sir.
What it is?
Trademarked.
Listening everyone?
Yes, sir.
My classes has a logo. No one can copy that because it is registered, trademarked.
Yes,
Number two, my books are copyrighted. No one can copy. Now do you understand the difference between both? First one, logo is registered. Book is copyrighted. Like that, how will you create a goodwill? I have a documented proof of my classes logo. I have a documented proof of my book's copyright. What is the guaranteed proof of a goodwill? Adi. That's why goodwill is not a recognized intangible asset. Listening or not?
Yes, sir.
Automobiles, pharmacy, pharmaceutical companies, these two will run on formula. Run on? chemical things, whoever involved, they will run their organizations on the basis of the formula. Medicine has to be prepared. There will be one chemical formula for the medicine or not? Fuel injection machines has to be worked. There should be some chemical formula for that or not? These are all called as a formula. No one will leak them. Listening or not, everyone? So therefore try to understand tablets, injections, vaccinations. Liquid is very cheap. What is costly? Idea is costly. COVID. If vaccination wouldn't have come, even till today Indians might have died. See how vaccination has worked in India? Our country is the classic example that the vaccination is working. Did you understand the point or not? Our country is a classic example for the world. 200 crore population we have done this. Sir, 140 crore population 200 crore vaccinations, how will you give? Some people have taken 2 doses or not? 200 crore plus vaccinations are done in India. Are you understanding or not? Means, what is the indication here? Vaccination will stop the disease to contagiously connect with another person to another or not? Formula is working. Are you understanding? Sorry, for example, I fell down. Small scratch happened on my leg. I went for a TT injection. 20 rupees they will do. Liquid bottle size is same. COVID vaccine bottle size also same. But they charge 700 rupees for that. Why? Is it 20 or 700? Why so much difference? Difference because of bottle. Difference because of liquid. They will use same sterilized water for both. But what is different there? The medicine what they add is different. That medicine comes out of the intellect of a person. That will carry a value. How can you value Koushik Mukhesh brain? You can't value. Are you understanding or not? How can you value? You can't value because it is immeasurable. You can't measure that. Every day I will learn. Every day new things will be dumped into it. Then how can you measure? Those are called as intellectual properties, brain power. So intangible assets means immediately never tell goodwill. Goodwill is not coming out of the intellect of a person. Yeah? Goodwill will come out of brand you create. Goodwill will come out of the brand you create. You create bigger brand, goodwill will be more. Apple has a good goodwill, bad goodwill. Good goodwill is there. Very good goodwill is there because the brand has a value. Kingfisher? Goodwill, bad will. Do you know why? Because its brand has lost a value. Brand will give value. That's why in the today's world, goodwill concept is not there. Brand valuation is there. Because brand is the mirror image of the goodwill. Listening or not, everyone? That's the point, sir. So therefore, never tell goodwill directly. Don't shout like that again. So tell me, plant property equipment, what is the first one? Tell the list of some tangible assets you know. Land and building, plant and machinery, furniture, fixtures, all these are what? Next one, what is the second one? Can you please tell me what is intangible? Goodwill. Patents, trademarks, brands, copyrights, these are intangibles because all these are registration possible. You can register your patent, copyright, trademark, brand, but you can't register the goodwill. Next. Capital work in progress. Sir, what is capital work in progress, sir? I didn't create a machine, but money is pumped also into it, going on. Progress light is there. How should I show? I should not show it as a cash because cash already involved. Building under construction, slab work over. How I should call it? It's a building, huh? You can't live. It is not at all an asset, huh? No, already most of the part is completed. We call it as a capital work in progress. It's the new creativity of Indians. Okay, na? It is not tangible totally. Next. It is not intangible totally. What it is? Capital work in progress going on. Next one. Read, yeah, non-current investment. Can you please tell me what is current investment? Within 1 year. I want to hold the shares for 10 years. As what I should show? Non-current investment. Next one. Like deferred tax liability, here comes the deferred tax asset. Next one. Long-term loans and advances, other non-current assets. Please copy down the format. First point, everyone tell me, understood the balance sheet fully, yeah? Yes, every item of balance sheet. Yes, right on. Schedule 3 format. You should remember this, or else I am telling you, you will lose 6 marks in exam. Write on the format properly. Format of balance sheet. One and two completed? One and two. Oh. Completed 3 and 4. 3 completed everyone? 3. 3. Write it fast here. Total 1 completed. Total 1. Equity and liability is completed. Can we move on to the second part, assets? Okay. Right on. First one is non-current assets. Are you writing in the same way? Write in the same way. Heading 1 should come. In that again sub branches A, B, C, D, E. 5 parts should come. Non-current assets completed? Yes, everyone, non-current assets completed writing? Yes, no. Write down the current assets and the balance. We should be total liabilities and
Why should we have that?
I will tell. First write down, sir. Completed trading total to okay? Okay. Now listen. See here. Shall we continue? Point is, we have written the format of the balance sheet. And by the way, answer, we have written the balance sheet format, P&L format. We completed only the format of a balance sheet. Okay. Please see there. Now first one, equity and liability. Sir, equity liability is a minus or plus? Liability is a obligation or is a privilege? Negative or positive? Negative. Asset is a positive number. Previous T-shaped balance sheet la visibility is there. Left side 100 means right side also 100 should come. Here that concept is not there. Vertically you are writing. Means rather than writing as a balance sheet, they will make total as a 0. Total as a 0. Liability is a negative or positive? Negative. Liability negative 100 means asset should be positive 100. That's why we will total at the last. Showing that the balance is 0. There is no difference in the asset and liability. Everyone understood the concept clearly? Yeah. That's why finally they will total 1 and 2 to make it 3. Hopefully you understood why it is totaled there. It is total not to tell 300 plus 300 600. It is to tell that 300 assets is there. Entire 300 is applied as a liability negative. Total balance is how much? 0. There is a balancing figure. 0 is a balancing number. Understood the point clearly or not, everyone? That's all. Sir, listen. 1 second. Sir, in the class, 2 things are very, very important. Number 1, doing the problem. Second one, understanding the theory. Financial management subject, don't understand that just we will do the problems and complete the answers as well. No. You have to understand full theory behind it. First tell me, what do you mean by liability? What do you mean by liability? Simple question I am asking. Obligation. Liability is a? Obligation. Why obligation is created? Because you brought money from others. It's not your money. It is others' money. When you brought others' money, you have an obligation to repay them. Correct? Therefore, liability is created. Simply, liability is called as getting the money. Asset is called as putting the money. Liability is getting the money. Very bad. Liability is getting the money. Asset means putting the money. Simply, liability is the source of fund. Asset is the application of fund. Okay, that's what I have written here. Please read the answer. Balance sheet consists of writing later. First read. Balance sheet consists of liabilities and assets. Liability is the source of fund. Asset is the application of fund. So in simple, getting money is a liability. Putting money is a asset. In the sources of funding, there are 2 popular ways. Number 1, owner's money, shareholders. Next one, borrowed money, others' money. Read. Owner's money is called as equity. Others' money is called as debt. So simply, owner's money is called as equity. That's why here equity and liabilities. Equity means whose money? Owner's money is called as equity. Others' money is called as debt money. So owner's money is called as equity. Others' money is called as debt. Equity includes 2 things again. Tell me, what are those? Share capital come reserves and surplus. That includes 2 things again. Tell me, long-term and short-term liabilities and secured and unsecured. And last one, sources of funds are used to finance fixed assets, investments and current assets. That source of fund which is employed in assets is called as capital employed. Is called as capital employed. Tell me. Own money is called as what? Everyone. Loan money is called as what? Both monies is called as what? Capital employed. That's what. That means you will buy the assets of a company using own money or using loan money, a combination of own and loan. Everyone. Now I will ask a question. In my company, I raised money, 100 crore money using the equity, 100 crore money by a bank loan. How much is that totally? 200 crore. Now tell me, how assets will be purchased? I want to purchase asset worth 50 lakhs, 50 crores. 100 crore equity I raised, 100 crore debt I raised. Yes, sir. How many crores I have? 200. Everyone. 200. I want to purchase asset worth 50 crores. Asset worth? 50 crores. From where I will pay? From equity, from debt, or anyone, or combination? Combination. Now question is, I raised equity worth how much? 100. Debt worth? 100. Answer. 100. I want to purchase an asset worth 50 crore. People may tell like this, sir, you can buy totally out of the equity, or you can buy totally out of the debt, or you can also use a combination of equity and debt in a proportion. Correct? Buying only by equity, possible or not possible? Buying only with some amount of debt, possible or not possible? Both are not permitted. Listen, companies must follow capital structures for every purchase of asset. That's why there is a separate chapter in our syllabus, capital structure theories. That chapter came for that reason. Listening, I raised 100 crore equity, I raised 100 crore debt, totally 200 crore, I want to purchase only 50, therefore fully financed by equity, you will die. You should not do like that. Are you understanding or not? Capital structure must be followed even if you purchase a 10 crore worth asset. For hello, everyone in the class listening? Yes, my debt equity ratio is 1:1. 1:1 means every 100 rupee purchase, 50 rupees should come from the equity, 50 rupees should come from the debt. That's the optimum capital structure for that company. Yes, one chapter is there in our syllabus. What is the name? In that capital structure chapter, what we will see, which capital structure is perfect for which company we will see. We will tell for your company 2:1 is correct. That's all. 2:1 means 3 rupees, 2 rupees should come from the debt, 1 rupee should come from equity. Yes, sir. Yes, sir. Listening or not? Yes, means I want to purchase asset worth 30 crores. What I should do? 20 crores should come from the debt, 10 crores should come from the equity. You should follow that pattern always. Yes, sir. Why we should follow? What will happen if I don't follow? Separate chapter is there, then we will discuss. This is not the time to discuss about capital structures, but I am telling that how important to follow the capital structures in a company. Okay, na? So now everyone answer my question. What is an asset? Application of fund. What is a liability? Source of fund. Getting money? Putting the money? Putting the money? Getting the money in how many ways? Number one, owner's money. Second one, others' money. Others' money is called as debt. Owner's money is called as equity. Both put together called as capital employed. In a structure, if you use, it's called as a capital structure. This is the idea behind. Everyone understood the concept clearly? Yeah. So please write down the notes on this. Below that, keep the heading notes. Properly write down the answer. Completed first 3 points? First three. Means a balance sheet in the sources of funding and owner's money is called as equity. Those 3 points completed? Sir, if anyone didn't complete, at least let me know. After scrolling down, I can't come back again. If you ask me to stop, I will stop there. Shall I scroll down? So if you complete, please tell me. I will go to the next point. Sir, everyone understood all the discussion made till now clearly? Yes, I will summarize once for all and then we will go into the next area. We are now starting with the ratios formula first. First we will write the formula. Second one we will understand the meaning. After that we will start doing the problems. Chapter is easy if you understand the formula properly. One by one let us start doing. Can we? Yes, now listen. Summary of whatever we discussed in the today's class. First I told you one more time about why ratios analysis chapter. Why ratios analysis chapter? Comparison. How many kinds of comparison will be there? 2 types. Number 1, inter-firm comparison. Second one, intra-firm comparison. I compare with myself. I compare my past with my present is called as what? My present and others present. That's all. So there are 2 types. Third type is also the benchmark comparison. Third type is I am a student. Sorry, for example, these 2 students are there. She is comparing herself with her marks. This is called as inter-firm comparison. She is comparing her marks in one test with other test, same marks. That means, for example, she has written one exam. Some mark has come. Next exam, the same subject, a different mark has come. That's called as what? Intra-firm comparison. Her present with her past. Her present with others present is called as inter-firm. Listening? For example, benchmark is there. This academy said that minimum benchmark you should get is, say for example, out of 100, 70 you should get. She got 65. She can tell that, okay, I should perform more better. She got 75. She can tell that, yes, I perform better than a benchmark. 3 types of comparisons can be there. Number 1, intra-firm. Number 2, inter-firm. These are 2 popular. Third one is benchmark comparison. In our exam, what is there? All the 3 are there in our examinations. Okay? What are all the benchmark comparisons, inter-firm comparisons, intra-firm comparison? We will see in a while. Before going into the next stage, up to here, everyone had a clarity, yeah? Yes, sir. Asset is called as putting the money. Application of funds. Liability is called as getting the money. Source of fund. Both of them put together is called as what? Capital employed. In what structure? Capital structure. How capital structure should be? In the capital structure chapter we will see. Am I clear? Next. Now we completed format of what? Balance sheet. Now we are coming into the format of P&L. See that. Format of P&L. And again, P&L format means not what you learned. T-shape, opening stock, sales, purchases, direct expenses and other things, closing stock, gross profit. That concept will not be there. That was not followed anywhere in India. That is only for your understanding sake. At CA foundation level they might write like that. But schedule 3 format, like this it will look like. First one, tell me, what is the first item of the P&L? Everyone in the class, what is the first one? Revenue from operations. Meaning what? Listen, every company will have not just sales. I will give you an example. 3 things can be there. Number 1, main item, joint item, byproduct item. 3 types will be there. In costing also you will have this. Process costing, joint and byproducts. Started a costing? Yes, sir. Joint and byproduct started? No, process costing started? No. No, when it comes, definitely faculty will take that. At the time you can understand much better. There are 3 products totally in a company. Like manufacturing aithe 3 things. Number 1, main product. Second one, joint product. Third one, listen carefully, I will explain you. What is a main product? What is a joint product? What is a byproduct? What are the manufacturing processes which are very popular for this? Number 1, petroleum. Number 2, sugarcane. Classic examples, because whenever you start manufacturing the sugarcane, there will be a byproduct, there will be a joint product as well. Joint products means during a process, 2 products broke out products will come out. Those are called as a joint products. Those are called as a, both are saleable. Both are? For example, I started processing of sugarcane. Listening, huh? Started processing the sugarcane juice will come. Okay, sugarcane juice will come. From that, I can have 2 types of joint products. One is a sugar, or one is jaggery. 2 joint products can come. Next, during the process of manufacturing or processing the sugarcane, 2 chemicals will be released. One is called as a molasses, another one is called as a bagasse. 2 products will be released. One is called as a molasses, second one bagasse. Bagasse, molasses are the 2 chemicals which will be released, very popularly used in all pesticides and fertilizers. All Sir, then what is it? Joint and byproduct, and both are same, na? This is a byproduct, this is not a joint product. What is a byproduct? My intention is not to manufacture byproduct, but during the process of manufacturing it came out. What is my intention? To manufacture molasses, huh? What is my intention? Manufacture sugar or manufacture jaggery. That is my main intention. My intended products are these 2. During that intended products, what also came out? Molasses and bagasse also came out. Listening, I started my manufacturing plant to manufacture molasses, huh? Answer. But I am also selling it or not? That should come under other income, not from operations. Your intention is not to manufacture molasses and sell. Your intention is not to manufacture bagasse and sell. You are also selling that. But your main intended operation is what? Sugar or jaggery, whatever the case may be. That should come under revenue from operations. Now hopefully you understood how to present the P&L account. In your foundation, what you learned is not there. In real life, this is only there. Are you understanding? September month I am available in Chennai. September month. When I came again? October like. Why I am not in September? September month I have tax audits. I can't move back left or right also. Full 1 month I will be fully locked in that. There are 7 companies AGMs we conducted. 7 company AGMs are there in the month of September. We have to close the AGMs. So many companies are there. Annual general meeting, AGM. Annual general meetings we have to conduct. We have to close the books of accounts. Almost around 70-80 companies are there. For all we prepared P&L in this way only. There are 2 types. Number 1, operations revenue. Number 2 is other revenue. For example, I will tell you, rent came. Company is having a registered office. And also own commercial flats are there for the company. From that I got a rent. Rent is a revenue from operations. And I started my company to collect rental income. Rental income is main income, other income, other income. Next. Totally put together is called as what income? Total income, also called as a total revenue. Tell me what are the first 2 items? Revenue from operations, other incomes. Okay, totally put together is called as a total income or total revenue. 1 plus 2. Over. Up to here, everyone understood? 4th item, expenses. How many kinds of expenses will be there? Let us see. First one. Answer my question. To have this sugar to be manufactured, I have so many raw materials involved or not? Yes, I will ask you one question, answer. Sugar cane is the first requirement. Chemicals to be mixed with the sugar cane is the second thing I require, correct? These 2 will create a production called as a sugar or a jaggery or whatever the case may be, correct or not? That's why. Cost of raw materials consumed. To get this revenue, first I need to have a raw materials or not? That cost of raw materials we will take. Listening? Other stocks of purchase, any other cost other than materials, if you purchase any stock like chemicals etc., those all come under what? Purchase of the stock. Next one, Salaries, bonus, PF, whatever you pay, all other things will come under what expense? Employee benefit. That's why AS 15 is employee benefits. It's not salaries. It's not? What it is? That's why AS, I told you now, worst standard is there. That is what AS 15. We are doing, so this is a P&L account as per FM, P&L account as per accounts. Accounts. That's why AS 15 accounts, employee benefit is there. That's why here also they will use the word employee benefit expense. They don't use the word salary. Are you getting my point or not? Tell me, what are the expenses? Number one, cost of materials consumed. Second one, any other purchase of stock. Third one, employee benefit. Next one, please explain me what is the finance cost. So tell me, debt I have taken a loan from a bank. Bank loan will have a interest or not? That comes under finance cost. Okay, next. What is the next one? Very important item. Whenever I have assets, assets create what? Depreciation. Intangibles create amortization. Assets, tangible assets create depreciation. These two. And last one, all other expenses. So tell me, what is a part 1? Part 1, revenue from operations. Part 2, other incomes. Part 3, total income. Part 4, expenses. Part 1, 2, 3 means part 3 technically minus part 4 will give you the profit before exceptional items and extraordinary items and tax. You take it. From that, exceptional items you remove. Which item? Exceptional item. Okay. Sir, what is an exceptional item? Question will arise or not? Government grant has come. One time government grant. Government will not give grants every day. One time in 20 years or one time in 10 years it will give. Income, but it will come every time. Exceptionally it will come. Exceptionally it will come. Those items you will write here. Listening everyone? Next. What is the next one? Extraordinary item. Profit before extraordinary items and tax. This is profit before exceptional items, extraordinary items and tax. From that exceptional items you are removing. What is there? Profit before extraordinary items and tax. Extraordinary items also you remove. Example, extraordinary items. Stock is there. It was burnt in fire. Total wastage. I have to reduce that amount or not? Those are all extraordinary items. Insurance claim received. Extraordinary items. All those you will adjust here. This accounts faculty will again take care in the final accounts chapter. Okay, that's why I am not going deep into that. Extraordinary items you will add or deduct. After that, what you will get? Profit before the tax. Tell me the format now. 3 minus 4 is what? I want exact answer. 3 minus 4 is what? Profit before exceptional items, extraordinary items and tax. From that, what you will remove first? Exceptional item. Add or remove. Anything you can do, I say remove. Tell me what will happen? Profit before extraordinary items and tax. Next. Extraordinary items you will remove. Next. Profit before tax. From that, what you will remove? Tax. After that, what you will get? Profit after tax. Okay. Tax expense you will remove. Profit after tax. That's called as a profit for the period. Listening? I am not writing preference dividend here. If preference dividend is also there, you will write the preference dividend also. Okay. I am assuming preference shares are not there. So totally the earning will be given to one person called as a equity shareholder. That's called as a EPS. What is EPS? Earnings per share. Everyone tell me what is it? Earnings per share. Earnings per share are of two types. Number one, basic. Number two, diluted. What is this basic and diluted? You will see in AS 20 EPS. There is accounting standard for you. So accounting standards, do you know that they are in your syllabus? In that accounting standard, AS 20 will be talking about earnings per share. There are two types of EPS. Number one will be basic. Number two will be diluted. Number two will be, If you want me to explain how diluted EPS works, I will give an example. I don't want to explain everything about the treatment of diluted EPS because I have totally 72 companies on hand now. In that 7 are listed public companies, remaining are private public combination. For all listed public companies, unlisted public company, private company, one person, small, what not, all company audits we have done. In all, commonly this is the P&L format. Okay. Diluted and basic EPS is mandatory. So what is diluted, what is basic? Sorry, answer my question now. Do you know the concept called as convertible bonds? Maybe most of them don't know. Therefore, I can't explain this. Okay, I will take another example then. Sir, convertible debentures I will explain. That's a classic example. Convertible debentures means what? Convertible debentures means I will issue them as a debenture. Debenture means it's a debt equity. Answer. But you can convert them into equity shares. You can. Sir, today I will buy and tomorrow can I convert? No. Tomorrow they will tell the time period. 5 years after you can convert these debentures into equity shares. Debentures into equity shares. Everyone concentrate here. You are all convertible debenture holders. You subscribe it for convertible debentures. I took money from you. I issued debentures to you. Tell me, in your hand what is there? Normal convertible. How many years convertible? 5 years. In the particular 5 years time, can you convert or cannot convert? You cannot convert. You can convert only at the expiry of 5th year. Listening? I raised 1 crore rupee out of you. Okay, how much? 1 crore. Your 1 crore money, whatever I have taken will be taken today after 5 years. Today only I will take money after 5 years. Then what? Why I am issuing debentures to you then? Money will be taken today. Conversion will be happening after 5 years. In the meanwhile, in your hand what is there? Again, start from the beginning again. Very bad response. Tell me, what I issued to you? Debenture, clarity first give me. Debenture, convertible debenture. It will be a debenture, share. For 5 years it is a debenture. After 5th year it will become a share. This is the point. Okay. Now second point. Point number 2. So your debentures will become share not today. It will become after 5 years. Tell me. When I took money? Today. After 5 years you will convert them into shares. For money, without money? Without money. Free of cost you can convert them into shares and you can continue as a equity shareholder. Yes, up to here everyone had a clarity. Yes, tell me. Today in my company there are 10 lakh shares. How many? 10 lakh. Profit is 1 crore. Profit is? 1 crore. Tell me the EPS. 1 crore divided by 10 lakhs. Tell me how much is EPS? 10 rupees is the EPS. Yes, sir. Correct? Yes, sir. Let us take for example sake all the next 5 years company profit is 1 crore. 1 crore, 1 crore, 1 crore, 1 crore, 1 crore. Okay? Now tell me. 1 crore is the profit of a company. How many years? Tell me. First year? Second year? First year. EPS. Second year earning total profit. EPS. Third year. EPS. Fourth year. EPS. Fifth year. EPS. 10. Correct. Okay. Now what happens? 5th year end, people started converting the debentures into shares. Listening? With extra money, without paying any money. Without paying any money. Because I already paid in 5 years back. Why I will pay again like a fool? I will not pay. I will directly convert them into shares. Because of converting into shares, extra 10 lakh shares came. How many lakh shares? Extra 10 lakh shares has come. Now tell me, next year also, 6th year, tell me, how much is the total income? Profit. Profit is how much? 1 crore. Shared by 10 crore, 10 lakh shares, 20 lakh shares. Everyone. EPS from 10 rupee will fall to how much suddenly? If shareholders see this, how they will look? They will think that company performance has raised or fallen. Answer. Therefore, don't show them and give heart attack to the shareholders. Even during that 5 years time, inform that in another 5 years, 10 rupee EPS will fall to 5, not because of my underperformance, because of diluting the EPS. From the first year onwards, you show the diluted EPS as 5. Original EPS is how much? 10. If all conversions are happened today itself, how much will be the EPS? 5. Such that you will prepare them for the 5th year from today itself. That's how the concept of diluted EPS came. Understood the idea behind the diluted EPS or not? That's how the diluted concept came into this Companies Act. All these are Companies Act concepts. How big Companies Act is? If person asks me, what should be your answer? I will tell you. One second, I will tell you. Companies Act, I will tell you. So, how much big Companies Act is? How much big means, in CA final there is one subject called as a FR, Financial Reporting. Around 4,000-5,000 pages will be there. Very big subject, Financial Reporting. One standard 300 to 350 pages it will be, like that 48 standards are there. So, that's a very big subject, mammoth. It's like an ocean type. Accounting standards, I mean Ind AS, not AS again. Ind AS I am talking, AS you leave off. Ind AS, only Indian accounting standards, if you see the International Financial Reporting Standards applied for CA final, that itself is around 4 volumes in our syllabus. Okay, first subject of CA final. Name is Financial Reporting. 4 volumes of books will be there. Those 4 volumes makes out one subject called as a Financial Reporting. Financial Reporting. That one subject containing 4 volumes is one section of Companies Act, section number 133. If you have a doubt, open the Bare Act after my class. You read what is section 133. 133 is a section. Below that rules are there. What is there? Rules. There are 768 rules are there. Those 768 rules became accounting standards. Okay. That means biggest subject of CA final, financial reporting, is one section of Companies Act. Now I am leaving to your imagination how big Companies Act will be. From that Companies Act, auditing standards came. From that Companies Act, accounting standards came. From that Companies Act, company taxation came. From that Companies Act, Koushik Mukhesh came. All these you leave off. Remaining all I don't know. I became a teacher after Companies Act. So, my point I want to stress is, Companies Act is such an important act in the life of a chartered accountant, without which you can't continue any practice. So, the point is very clear. These are all Companies Act standards. Schedule 3 of what? Companies Act Schedule 3. Companies Act Schedule 1, Articles of Association, Memorandum of Association, format memorandum and format articles. Schedule number 2 is depreciation. Schedule 3 is the format of P&L and balance sheet. Okay, so these are all schedules under which act? In Companies Act, there are 14 schedules totally. How many? 14 schedules. In that 14 schedule, this is one of the schedule. Okay, that 14 schedules are now condensed to 7. 7th schedule is CSR, Corporate Social Responsibility. You will find that in Companies Act, section number 135, chapter number 9. Sir, okay, point is very clear. These all things what you learn now in Companies Act, in which chapter you are going to learn them again? There is a chapter called as Accounts of Company, chapter 9 of Companies Act, read with schedule number 3. There again this will come. At that time you will come back to the conceptual clarity of Companies Act once more time. But still, everyone understood what is the format of a P&L and balance sheet? Everyone in the class understood? Tell me the P&L format. First, number 1. Second step, other income. Third one, total income. Over. This is set number 1. Next, expenses. Remove all those. What will you get? Profit before exceptional item, extraordinary items and tax. Remove the? What you will get? Profit before extraordinary items and tax. Remove what? Remove means add or remove. Anything. Add or remove. For example, income side extraordinary income is there, deducted. Expenses side extraordinary item is there, add it. Add or deduct accordingly and then calculate the balance. Listening? Tell me, profit before extraordinary items and tax. From that what you have to add or deduct? Extraordinary items. What you will get? Profit before tax. From that what you have to remove? Tax expense. Profit after tax. Preference shareholders not there. Say for example, I prepared in that way. Assumption is preference shareholders not there. Total is the earnings available. Divided by number of shares will be EPS. When you write EPS, you should be careful. You should not write just the EPS. You should also write down diluted EPS. What do you mean diluted EPS? If all the convertible debentures are converted today itself, really we are converting today now after 5 years. But after 5 years, suddenly if you show, they will get heart attack. Why last year 10 became 5 today? Prepare them from today itself. Listening, at that time what will happen 5 years after? Basic and diluted will be same. Basic and diluted. What will be the basic EPS after 5 years? 5. Diluted EPS? 5. Okay. Then they will tell, okay, we know that it will become 5 years before itself. No shock to them. Are you understanding or not? So, diluted EPS is a shock absorber. From the beginning itself, we will tell that I am going to give a shock to you. But not today. When we are going to give? After 5 years. We are getting them ready to that shock. Clear everyone? This is the completion of analysis of P&L and balance sheet. First part of ratios chapter over. Everyone understood the concept clearly? Analyzing P&L balance sheet, first part of the story. Hopefully everyone understood the first part of the ratios analysis chapter. What we done? Analysis of balance sheet and P&L. First point, everyone comfortable up to here? Yes, sir. Next. You have written the format? No, write down. Very important. Mark it. Exams very frequently they are asking, prepare P&L, prepare balance sheet. At that time, if you prepare T-shaped, they will put 0 marks there. If I am to value, I will put 0. Format means this is a format. First 4 points completed. Up to expenses. Completed writing? At least up to 7. 7 profit before the extraordinary items and tax. Okay, now completed? Hello, everyone, completed writing? So we have now completed formats. What are the 2 formats we have completed? Balance sheet format, and next one is P&L format. 2 formats we have completed till now. Next stage. With this we have completed understanding the formats of how P&L format will look like and how balance sheet format will look like. Okay, next. We are now starting exactly with the main point. Keep the heading ratios and its analysis. Ratios and its analysis. Ratios and its analysis. Don't shout for a break, I am not going to give. Don't waste your time by shouting. I will leave you 15 minutes early, but I don't give break. Okay, please. Sir, flow will be affected, please. Write down. I will leave you 50 minutes early rather than taking 50 minutes break now. Write down. Ratios and its analysis. First, please let me put the full screen document. You can copy it later. First, let me explain what they are. Before even starting with, let me first tell you how many types are there. There are totally 6 types of ratios. Okay, see the screen. Ratio type number 1. What is the first type called as? Liquidity ratios. What is the first one? Liquidity ratios. Second one? Capital structure ratios. Third one? Activity ratio. Fourth one? Sales profitability ratios. Next one? Capital profitability ratios. And last one will be miscellaneous ratios. In that miscellaneous, I didn't write all. What are most important from exams point of view only I have written there. Other than this, there are another 7 ratios are there. Okay, not tested in examination, but there in the syllabus. Lastly, we will discuss at the end of this chapter. Problems also we don't find on those ratios, but there in the syllabus. Listening, huh? In this, if you leave even one ratio, fasak, none. All ratios you should understand the meaning and applicability. Okay, one by one, let us read first. What is the first one? Everyone in the class. That ratio will be talking about insolvency or solvency, also called as this ratio. Liquid ratios is also called as short-term solvency ratios. Everyone repeat what they are called as? Short-term solvency ratios. Simply, is your company able to pay immediate liabilities? Is your company able to pay? Immediate liabilities. What do you mean immediate liability? Long-term liability or short-term liability? Short-term liability. Whether you are solvent in short term will be discussed using which ratio? Liquidity ratio. Whether you are liquid in long term, capital structure ratios will decide. This is short term solvency. Second one is long term solvency. Everyone repeat. First one. Short-term solvency. Second one. Long-term solvency. One more time. First one. Short-term solvency. Second one. Long-term solvency. What do you mean by solvency? Solvency means having enough money to pay liabilities. Having enough money to pay the liability is called as what? Solvency. Short-term solvency means what? I have money to pay my short-term liability. Long-term solvency means what? I have money to pay my long-term liabilities. Listening or not, everyone in the class? I will give you an example. First one. What is the first one? Liquidity, also called as short-term solvency. Second one? Also called as? Also called as a long-term solvency ratio. Okay. Meaning of each and every item inside that we will learn later. What is the third one? This exam la most important one is the first one, liquidity. Second one will be activity. CA final questions also will come from this. I will show you latest CA final exam. Every CA final exam la 6 to 8 marks will come from ratios. Any CA final paper you take, how many marks? 6 to 8 marks will come from ratios chapter. But they don't give ratios separately. They will merge those ratios points inside the problems. Students should not learn it final. They should learn it intro only. Same concepts they will apply again in CA final examinations. Getting the point, huh? Therefore, please don't underestimate this chapter. Very, very important for your examinations. Please concentrate. Point number 1. What is the first type? Second type? What is the third type? Activity ratio is a concept where we are going to analyze. These are the 6 ratios. Number 1, capital turnover, fixed assets turnover, working capital turnover, debtors turnover, inventory turnover, creditors turnover. Sir, what are all these? Are turnover everywhere? Listen, why turnover everywhere? Tell me. Turnover means sales. Turnover means sales. Any company will purchase assets to generate sales, to get money, make the profit. Correct? Profit means what? Profit will not come from sky. You have to purchase and you have to sell. Balance will be the profit. Correct? That means I purchase the goods, I didn't sell, profit will come? Answer, yeah. No. When the profit will come? Only when you sell them. Okay. So what generates profit? Sales generate profit. That means sale is the activity that should be done. Sale is the activity that should be done in order to create what? Profit. Everyone repeat the point. What should be done to get profit? Sale. I purchase the goods. Profit will come? No. Purchase goods must be sold. Difference between sale and purchase will be profit. Everyone in the class. Profit. What did the activity company has to do? Sale. Sales is also called as turnover. Sales is also called as turnover. Profit will come out of sales. That means purchases I made. After that what I should do? Sale. Turnover generates profit. Turnover generate profit. So tell me, first activity has to be done. Profit generates activity. Activity generates profit. Activity generates profit. First activity. That's why what is the next one? Sales profitability. Next one we'll discuss about the profitability ratio. What is the third one? Activity. How beautifully they designed the activities. See here. First, I raised 100 rupee. I raised. Using that 100 rupee, for example, from all of you, I raised 100 rupees. I have 100 rupees in my hand. 100 rupees I will keep it idle. I will invest. I will invest in what? I will invest in fixed asset. I will invest in current assets. First I will invest in? I will invest in? Current assets. Tell the names. Stock, debtors, all these are the current assets. Correct? Answer. I raise money from how many sources? First one, equity. Second one, debt. Very bad response. First one, equity. Second one, debt. Tell me, I can raise money from? I can raise capital from? Number one, equity. Number two, debt. Both put together is called as? That's a capital here. From the total capital employed, you will put in dashbina, you will invest. From that investment, what you will generate? Turnover. That proportion of turnover on the capital is called as a capital turnover. Are you understanding the point or not? Always remember, turnover will be the numerator, remaining will be the denominators here. How much turnover you are generating for the amount of capital employed. Listening or not, everyone? 100 rupee sales on a capital employed of 80 rupees or on a capital employed of 100 rupee means 1:1. Means for every 1 rupee of capital you are generating 1 rupee of sales. Hopefully everyone understood the point. Next up. Now I will ask you the question. What is this? Capital. Read. Capital turnover. What generates turnover? Air generates turnover. From A directly, turnover means turnover will fall in hand. From where turnover has to come? From capital invested, turnover will get generated. Correct or not? First what you should inject? Capital. Okay? Capital came. Turnover generated. Turnover generated because of capital. Turnover generated because of capital invested. I raised how much money from all of you? That's all. I didn't do anything. I kept like that and I sat and I saw like you. That's all. Turnover will come? No. Capital important. Capital investment is important. In what you should invest? Fixed assets, current assets. Breaking that capital into 3 parts. Part 1, fixed asset. Part 2, current asset. Part 3, idle capital. Part 3 will be idle capital. 100 rupee I raised. 80 rupees in the current asset, capital asset, 10 rupees in current asset, 10 rupees is not at all invested. Yes, sir. Not at all? Invested. Therefore, we are breaking now. Fixed assets turnover, current assets, working capital means current asset. Current asset turnover. In that current assets again, how much is in the form of credit sale, how much is in the form of stock and not sold, how much is from the creditors, everything we will separate. Those are called as activity ratios. Understood the point clearly? That's how activity ratio started. Means there is only one source. What is the source? Capital. A capital, small pieces, they are breaking it. That means how much deep analysis they are doing. Understanding the point or not? Tell me the ratios. Liquidity. Second one, Capital structure. Sir, why you are not discussing about 1 and 2 in so deep way? Because we have to discuss now. Okay, for that will take hours together to explain the concept. That's why easy ones I am explaining first directly. What is the third one? Activity ratio. What is activity? Turnover is an activity. Okay. Sale is an activity. Sale comes directly, yeah? No. Sale comes from capital. Capital can be of how many types? 2 types. Equity, debt. Total is called as capital employed. Capital employed, not capital invested. How much capital I have raised? 100. In that 100, in what ways I will invest my 100 rupees? How I will apportion? Some amount in fixed asset, some amount in current asset, some amount may be kept idle also. Listening? So therefore, I will bifurcate them into 3 parts and I will understand how my capital is running inside the business. Okay, na? Lastly, at the end of this chapter, we will take TCS balance sheet. Which balance sheet? At that time, you can understand much clearly as to how practically we can apply all these ratios. Okay, na? So, activity ratios. Next one is a sales profitability ratio. What is the name? Sales. Here, what is this? Sales profit. I will ask you a question, please answer. Maybe you know this or not, I don't know. Actually, you should know this. You know dy by dx, huh? Yes, can you tell me what you mean dy by dx? No. That I am not asking. Differentiating y with respect to x, x with respect. I am not asking that. I am asking what is the meaning. So don't ask about meanings. You ask a formula, I will give answer. What is dy by dx asal? Why this concept came? Can you please tell me? Listen. Will you listen? Yes, sir. Tell me. For what purposes we will use this differentiation? No. Why we will use this? In math, why we will use this? Tell me. What rate of change? Why you are asking? Slope. Enna slope? Sir, okay. ये क्या है? Oh. Tell me. I will give you 2 variables. I will give you 2 variables. Variable or constant generally don't require graph. It will have a common point. Na? I will take 2 variables. 2 variables, one increases, another decrease, one decreases, another increase. It's an inverse relation existed between 2 variables. Listening? Yes, so tell me, when I give a graph, I gave you 2 variables. Is there anything to say that must and should this should come on x-axis, must and should this should come on y-axis, or we can replace both? Sir, for example, 2 variables I have given here. Hey, listening? Yes, for example, number of units of cost of production. Yes, sir. Number of units? Number of units increases, cost of production will increase. Number of units decreases, cost of production will decrease. This is a general tendency, correct? Tell me. Now, I want to draw a graph on increase in number of units, increase in the cost of production. Yes, sir. I can take number of units either on the x-axis or on y-axis, or I can take the cost on x-axis or cost on y. Is there any rule that number of units should come only on x-axis, total cost should come only on y-axis? Is there any concept like that? No, yes, yes and yes. Don't answer on the basis of my body language. Thumb rule number 1, sigma rule 1. If you answer on the basis of my body language, like this sound will come. Listen. Must and should number of units should come only on x-axis. Now listen carefully. Why they are writing like this? Number of units, cost of production. Number of units increases, cost of production increases. Like this the graph will be. It should come only on x-axis, sir. Yes, it should come only on x-axis. Listen why. Derivations in math has come to tell what is the influence of one variable on another. What is the? Very bad. Everyone? While telling the influence, they will tell the rate of that influence as well. That's called as a slope. Rate of influence is called as a slope. Now tell me. I will make two statements. You tell me which is correct statement, okay? Then I will only ask you which to be put on X and which to be put on Y. As number of units increases, cost of production will increase. Second statement. As cost of production increases, number of units will increase. Which statement is correct? Sorry, I will tell another way. Some people who are from the direct entry, who don't know costing, even basics, maybe you may not answer this, therefore I will give another small example. Shall I? Yes, sun influences earth. Earth influences sun. This also doubt, huh? Earth influences sun. Sun influences earth. Gravity of sun has a great gravity or not? Because of gravity only we are rotating or revolution. Anything is happening because of the gravity pull. Sun always pulls towards it, but never we can catch it. If we catch an AFM class, gone. That day derivation also gone. So we can't catch, but it try to move towards the sun. It will pull it. Gravity will be very high. Okay. So now answer my question clearly. Who influences whom? Sun influences planets. The planets influences sun. Correct? Likewise, I am asking a question. Who influences whom? Number of units influences production cost, or production cost influences number of units? Always influencer should come on x-axis. Always. This is basic math rule. Always who should come on x-axis? Everyone. Who should come on y-axis? Influenced. What is it? Tell me now. Great learning. Tell me now. X-axis what should come? Very bad. Everyone in the class. X-axis. Y-axis. Influenced should come on. Influencer should come on. Who influences whom? Number of units influences cost of production. Cost of production influences number of units. That's all. As the number of units increases, cost increases. Not cost increases, number of units increases. You can increase cost even without increasing number of units. Are you understanding or not? If you buy from a waste supplier, he will charge a higher cost. Cost of production increase may not increase number of, but number of units definitely increase the cost of production. Who is influencer? Who is influenced? Who should come on x-axis? Who should come on y-axis? Who influences whom? X-axis means it should come on the top or down. That's when denominator x will be there always, dy by dx. That's a x-axis and y-axis notation in a different way. dy by dx, x is x-axis, y is y-axis. X is who influences whom? X-axis influences y-axis or y-axis influences x-axis. Therefore influencer and like this we should not write dy by dx. Variable of x, variable of y. Why I am saying variable change in x lead to the change in y? Listening or not everyone in the class? So therefore this is a map what they wanted to tell. Now tell me, who influences whom? X-axis influences y-axis. You try with any CA interest student who doesn't take coaching from us. Okay, I make them to learn all this, but normally you test, they will tell the same answer. Listen, Kaskun. So point is, question, you go to them, all of a sudden ask them, tell profitability ratio formula. First confusion, do you know what they will get? They don't know where to put the turnover. Denominator, numerator, doubt will come. Denominator or? What common sense our students has to use? Who is influencer is always denominator, numerator. Now you tell me, capital gives sales, sales give capital. How the formula should be? Capital should be on denominator. Perfect. Now, profit and sales, you tell me. Sales generate profit or profit generate sales? How the ratio should be? Yes, correct. That's all. That's how these formulas came. So, who influences whom is the most important thing. If you know that concept, the doubts will not come. Why? Numerator turnover, denominator turnover. Mug up. Why you are mugging up? Because you don't know how they came. That's why I'm telling about derivations concept. Who influences whom? Sales influence profit. Yeah, that's why activity ratios plus sales will come in numerator. Profitability ratios plus sales will come in denominator. GP by sales, NP by sales. Who influences whom? Sales influences profit. Sales increases, profit increases. Profit increases, sales increases. Maybe, may not be. Are you understanding or not? Yes, profit increases means, sorry. Yeah. Profit means what? It's a percentage applied on sales. Sale 100 rupee. Profit percentage 10. What is your profit? 10 rupee. Profit percentage 20. What is your profit? 20. Profit can increase even without increasing sale. But definitely if the sale increases, what will increase? Profit will increase. Who influences whom? Sales influences profit. So tell me, GP ratio, what is the formula? Sales by GP, eh? Why it should be like that? What is the intention of the formula? Sales influences gross profit. Influencer should be on x-axis. Influenced should be on y-axis. That's how these formulas came. Everyone understood the logic behind that. From this, no doubt should come. Activity ratios, activity comes because of capital. Because of? What should come on denominator? Capital should come on denominator. Turnover should come on numerators. Listening or not, everyone in the class? Working capital, denominator. Turnover, numerator. Listening? Yes, like that. Fixed assets, denominator. Fixed assets generate turnover. Turnover generated fixed assets. Sugarcane machine generated sugarcane juice. Sugarcane juice generated machine. Oh, sugarcane juice generated machine. Transformer. What generates? Basic sugarcane juice, if you understand FM, you can understand. Tell me, juice generate machine or machine generate juice? Who is the influencer? Who is influenced? Juice is the influenced variable. Where maths is not there, maths is there everywhere. Are you understanding or not? In your daily life, everywhere maths is there. So you should understand that properly. So therefore, what are the four ratios we just read? Liquidity ratio, capital structure ratio, activity ratio, sales profitability ratio. What is the next one? You should answer, I should listen. Sales profitability ratios, sales is in denominator. Capital profitability ratio, capital should be on denominator. That's all over. Last one, miscellaneous, EPS, MPS, P ratio, DPS, dividend payout, retention ratio, all these are the remaining concepts. This is the overall idea of this chapter called as ratios. Write down, sir. First two, don't ask me. During the course of explanation, I can tell. Very big areas they are. Write down the answers clearly. Note it down. First three completed. First three, liquidity, capital structure and activity. Two completed, huh? First two. What is? Huh? Operating, not opening. Operating profit. Space constraint is there for me, that's why I have written like that. Operating. CGs, huh? CGS, huh? That you understood. OPG means operating. CGS means cost of goods sold. Meaning you will see in costing. No problem, I will explain here also again. First two completed, everyone. Liquidity and capital structures. Those two I will discuss separately. Very much time taking. I have to explain with analysis. How many of you completed? How many of you not completed third one? Third one. Everyone completed third also. Hey, what you are doing here, Valmiki? Write it faster. Sales to profitability. This also you copied on. Gross profit ratio. I think you understood now how the gross profit ratio formula should be written. Gross profit comes because of sales or sales come because of gross profit? Sales come because of gross profit. Gross profit will come because of sales. So who is the influencer? Sales. Who is the influencer? Sales. So sales should come in the denominator. Gross profit should come on numerator. Therefore GP by sales. Fast, make it fast. We'll go to the next one. If you have written up to here, write down the next one. Capital profitability ratios. Fifth one. Capital profitability ratios. Shall I move on to the fifth one? Okay. Up it down. Capital profitability ratios. Return on capital employed, return on equity. Meaning we will see when we come there. First write down. Return on capital employed and return on equity. EPS means earnings per share. MPS means market price per share. PE ratio, price earnings ratio. DPS, dividend per share. Dividend payout ratio, retention ratio. Second one, MPS, market price per share. PE ratio means price earnings ratio. P means price, E means earnings. Price earnings ratio. Dividend per share. DPS means dividend per share. EPS earnings per share, DPS dividend per share. Next one is dividend payout ratio. dividend payout ratio. Last one, retention ratio. Retention ratio. Retention ratio. Completed? So we have completed understanding various ratios from the examination's point of view, what are applicable. First, everyone tell me, how many types of ratios are there totally? Everyone in the class, please be present when I am in the class. Tell me how many? What is the first type? Liquidity ratios. Second one, capital structure ratios. Third one, activity ratio. Fourth one, sales profitability ratio, capital profitability ratio, miscellaneous ratios. In that, how many we have understood? Again, I will explain there. On overall basis, how many we understood? Activity, sales profitability. Okay, and capital profitability is also very simple. So we need to first start with liquidity ratios, capital structure ratios first. Okay, na? One, hello, listening? Yes, sir. How problems will come in exam? First, let me tell you. They will ask a question on liquidity or capital structure. On what they will ask? One question will come for 10 marks. All ratios will come inside. That means you can't do the problem unless and until you know all the ratios. That's why in this chapter, topic, understanding, problems like that you can't do. First you should understand all the ratios. After that, jump into the problem, start doing them. Over. Listening, one by one, let us understand. What is the first type? Liquidity ratios. Keep the heading in your notes. Liquidity ratios. First class we will put effort in understanding. One class if you complete all these, after that you can start doing the problems. Keep the heading. Liquidity ratios. Okay? Liquidity ratios. First, write down in the same way in which I have given here. Discussion you can write later. First write down these two. Current ratio, liquid ratio. Write down this. Meaning I will tell you. First you write down. Ratio, formula, remarks. Ratio, formula, remarks. Current ratio. Completed writing the current ratio at least. Write down the liquid ratio as well. Don't write analysis. Lastly, we will write down. Okay. So what are the two types of ratios? Please tell me first. What are the two types? First one is current ratio. Number two is liquid ratio. If 10 questions are tested on ratios, 8 questions you will find these ratios. That much important these are. That's why I require a lot of explanation first. After that we can go into the next ratios. First everyone, as I already said, please repeat the point. What are the two ratios we started with? Current ratio. In that how many are there? Two. Sorry. First one liquid ratios. In that two types are there. First one current liquid ratio. What is the formula for the current ratio? Current assets by current liabilities. Next. Liquid assets by current liabilities. Don't write liquid assets by liquid liabilities. Why also I have a reason. I will tell you once you write. First point number one. Everyone have written. Everyone first confirm me with the answer. What is the first ratio we started with? Liquidity ratios. How many types are there? Two. Hello, last benchers also. Why you are sitting ideally? Everyone answer. How many types of ratios are there? Two types. Number one, current ratio. Number two, liquid ratio. What is the formula for the current ratio? Current assets by current liabilities. What is the current asset? Anything which is realizable within a period of 1 year is called as what asset? Current asset. Which becomes due within 1 year is called as current liability. Tell me, what is the formula for current ratio? Current assets by current liabilities. Understood up to here? Next issue. Second one. What is a liquid ratio formula? Reasoning we will see later. What is the formula? Liquid assets by liquid liabilities. There is no concept of liquid liabilities. There is only one concept. What is that? Liquid assets by current liabilities. Okay, na? Sorry. First we have to understand how these ratios are all derived. What is the meaning of this current asset by current liability? Keep the heading below. Notes on solvency ratios. Notes on solvency ratios. Just keep the heading, don't read anything. Notes on solvency ratios. Okay, see here. No noise please, shall we? Tell me, what is the first category of ratio? Sir, again and again I will be telling you, chapter is very, very important. Heads left and right if you do, if you leave a concept, that's all. Minute of a fraction in a minute, you will lose the concepts. So please ensure that you are listening. Shall we?
Yes, sir.
Tell the point. Number one, what is the ratios we started with? Liquidity ratios. In that how many types are there? Number one is current ratio. Number two is liquid ratio. Formula for current ratio. Current assets by current liabilities. What is the liquid ratio? Liquid assets by current liabilities. This is a current asset, this is a liquid asset. Tell me, what is a liquid asset? Current asset minus stock. These two if you leave, remaining will become what assets? Liquid assets. Become liquid asset divided by current liability. This is the situation. See the screen? Let us understand them clearly. What current ratio tries to convey? How, for example, a person came to you A bank came to you. It said, you are a chartered accountant, na? Please take this balance sheet of a person. Tell him whether he is solvent or insolvent in future. What is the health status of this company? They ask you. How to analyze the balance sheet? Once you do TCS balance sheet, we will take. We will check how solvent TCS is. Okay? First, tell me. Current ratio says that, what is the formula for the current ratio? Current assets by current liabilities. What is this concept? Listen, I will give you two examples. Mr. A and Mr. B. Listen carefully. Mr. A took a loan of 1 crore for 3 months' time and purchased a house worth 1 crore. Purchased a house worth 1 crore. B took a loan of 1 crore and purchased a house worth 1 crore. A and B does the same or different? Same. He has taken for 360 months. Who has taken for 360 months? A na B na? B. Everyone, yeah. Answer. B. A has taken for? 3 months. Everyone. 3 months. B has taken for? 360 months. Technically, how many years B has taken? Yeah, that also counting required. How many years B has taken? 30 years B has taken. And A has taken for 3 months time. Now you answer. A purchased a house worth how much? 1 crore. B purchased, very bad response. A purchased house worth how much? 1 crore. B purchased house worth how much? 1 crore. Both purchased the same type of house, identical. Second one. How much loan A has taken? 1 crore. B has taken? 1 crore. How many months A has taken? 3 months. How much B has taken? 360 months. What is the difference between A and B? Don't tell duration. The concept is, listen, you have taken a short-term loan to purchase a long-term asset. You purchased a long-term asset. Sir, house will be maintained for 3 months. You will buy house today, stay there for 3 months after that footpath. You will stay for 1 year, 2 year, long-term. House is a long-term asset or short-term asset? Answer. Now tell me, you purchased a long-term asset using a short-term financing or long-term financing? For all practical purposes, A is insolvent. Do you know why? Tell me, why you took loan here? You have money here, you don't have money here? Answer. Therefore, what you have done? You took a loan of how much? 1 crore. If you take it for 3 months, how can you pay the loan here? After 3 months, you have to pay the 1 crore. How will you pay? You have to sell the house and pay. Then why you bought? Listening or not, everyone? Therefore, it is always a moral. Everyone has to remember this. Never ever buy long-term assets using short-term funds. Never buy long-term assets using short-term funds. Short-term funds should be used to finance only short-term assets. Short-term assets. So now tell me, who is good in managing the finance? A na, B na? B. Because B has purchased which asset? With which liability? Long-term liability. Slowly he will pay. Every month 25,000, 30,000 like that he will pay over a 30 years period. He is a solvent or not solvent? Happily solvent. Tell me, his monthly salary, this fellow, monthly salary 1 lakh. This fellow monthly salary is also 1 lakh. Tell me now. Tell the characters of A and B. A salary per month.
1 lakh.
B salary per month.
1 lakh.
A took loan of.
1 crore.
B also took loan of.
1 crore.
A purchased house worth.
1 crore.
B also purchased worth.
1 crore.
Everything is same, yeah. Where the difference has come? Usage. Okay. Which loan you have taken? A has taken. Which loan B has taken? Now tell me, who will be happy? Who will be unhappy? B will be very happy because every month he will pay how much? 30,000. Still he is solvent because another 70,000 is there in hand in the form of cash. Listening everyone? Tell me, how much is a salary? 1 lakh cash is there. In this, bank person is standing on my door. How much I will pay him? Even after paying, how much is there? I am solvent or not solvent? Yes, example. A, how much he got? How much bank is standing after 3 months? 1 crore. Can I pay na? Cannot pay na? He will wait or will not wait? Will not wait. What they will tell? Sell the house and pay. I am solvent or not solvent? Not solvent. That's how the solvency ratios concepts came. Everyone understood the concept clearly? Always, what is the thumb rule that you should remember? Long-term assets should be purchased out of long-term finance only. What if? Black money? Means I didn't understand. Black money? Why you took loan then? For example, 1.5 crore rupee is the value of the property. See here, I am explaining that. 1.5 crore is the value of a building. 50 lakhs you paid out of black money. 1 crore you have taken loan. Loan is a white money. No, you can't do like that. Black money you can't invest completely. You can invest only little amount of portion. 1 crore loan means black money already paid balance, you have taken the loan. Now tell me, we are not going on illegal side anyway. So tell me now. So yeah, answer my question now. Point number 1. How much is a loan taken by A and B? Now change the names. It's not A, it's A Limited. It's not B, it's B Limited. A Limited has taken a loan of how much? 1 crore. B Limited? 1 crore. To purchase plant and machinery. Both the companies are buying what? Plant and machinery. Plant and machinery means you will use for 3 months and dispose. You will use for years together. And a long term or short term? Next. Loan was taken by A Limited for how many months? 3 months. B Limited for 360 months. A, every year it will get a profit of 1 lakh. Every year or every month it will get a profit of 1 lakh. B also get the profit of how much? 1 lakh. But B has taken that 1 crore as a short term liability or long term liability? Everyone? Long term liability means, long term asset means asset will be used over a period of time, but the liability has to be paid immediately. Asset generates sales immediately. For example, I purchase a building worth 1 crore for rental basis. 3 months rent will come back. Total 1 crore rupee worth rent. It will take years together to recover that rent or not. Therefore, answer my question. What should not be used for what? 1 second, everyone in the class, last benches, you are not answering. Please, everyone in the class. What should not be used for what? Short-term finances should not be used to buy long-term assets. Likewise, reverse also same. Long-term assets should not be used to finance long-term liability should not be used to finance short-term assets. Okay, na? Why? We will see. So, first point, everyone understood the current ratio concept clearly. No question arises. What is the formula for the current ratio? Tell the answer. Current assets by current liability. Tell me what are current assets? Tell me what are current assets. First tell me what is the first current asset? Cash. Cash is the first current asset. After that what? Stock. After that what? Debtors. After that what? After that what? Or the bills receivable. After that what? Bills receivable is also called as what? Debtors. Okay. Next one. Current investments. Next. After that, prepaid expenses. All these are what? Now you tell me the answer, I will ask a question. Start. You gave me a loan. Current liability. Short-term loan. How much loan? Short-term loan. 6 months loan. I have taken a loan from you for how many months? Answer. 6 months. I have to invest this money in long-term assets or short-term assets? I invested this in stock. Yes, Short term, long term. Stock will be there in the go down for 360 months. It will be there for days. Am I clear? Days, so months, so it will be cleared. Definitely. Correct or not? Yes, tell me, how money was raised? How money was raised? Short term, long term? How many months?
6 months.
How many months?
6 months.
What you purchased out of that 6 months money? Stock. You kept in the go down. Okay, na? Now tell me. Stock was sold, but credit sold means it is in the form of dash. It is in the form of dash. It is in the form of stock. It is in the form of debtors. Everyone. Debtors. Number 3. Bills are receivable. That is also in the form of a debtor. And third one, prepaid expenses. What is it? Prepaid expenses means you paid in advance. You paid in advance. You can sell prepaid expenses. Huh? No, you can't sell them. Those are not tradable. You paid extra. That's all. Okay. Now listen to my question carefully. You are a lender. You are a lender. I am a borrower. Short term or long term? Everyone? Fantastic. Now answer my question. I am a borrower. You are a lender. Short term lender, long term lender. Short term lender. Short term borrowing, long term borrowing, short term borrowing. Now listen. What happened is 6 months loan. You came and knocked my door after 6 months. You said, give back my loan of, so loan you have taken of 1 crore, 6 months completed today, you said. I said, wait, your money I invested in stock should get converted into debtors should get converted into cash. Wait for some time, they will give, I will pay you, I said. Will you wait? Will not wait. Then current assets, liquid assets is important to pay the current liabilities.
Yes, sir.
Then? That's why they will remove stock and debtors from that calculation, because stock is not cash. Stock has to convert into debtor. Debtor should get converted into cash. It takes time. Therefore, I want immediate cash. That's why debtors and stock will be removed out of it. Stock, debtors, all these things. Technically, they don't remove debtors. They will remove stock and prepaid expenses. They will remove, because debtors will get converted into stock. Stock they convert into debtor. Answer, yeah. Stock converted into debtor. Debtors immediately get converted into cash. Who is fast convertible? Stock or debtors? Answer. Therefore, remove stock from the calculations. That's how they have done that calculation. Tell me, what is the liquid asset formula? Liquid assets formula. I have shown you here. Liquid assets formula. Tell me, what is the liquid asset formula? Current asset minus stock. Why stock is removed? Stock is cash or not a cash? Why? Stock has to be converted into? Debtors will get converted into? How many stages are there? 2 stages you have to undergo. But debtors? For example, answer my question. He is a debtor to me. He is a debtor to me. I said him, you have to pay after 2 months. I will do one thing. I will give you 10% discount if you pay today. What he will do? Pay today. It's a 10% discount you are getting. He paid today. That means I can immediately realize this money into cash, because debtors are in my hand. But stock is not in my hand. Unless and until I find a seller, I find a buyer, I can't sell the stock. Clear or not, everyone? So therefore, tell me, now tell me, I will ask you a question. I said, you have given a loan. How much? 1 crore. Short term or long term? I invested in stock. He has given some loan, 1 crore again. That amount also I put in the form of stock. Listening? A has given 1 crore. B has given 1 crore. A?
1 crore.
B?
1 crore.
Short term or long term? B? Both. A is short term, B is short term. I invested also in current assets, stock.
Yes, sir.
From A, how much money I have taken?
1 crore.
I invested in that stock. I sold also. Debtors also. Debtors became cash also.
Yes, sir.
Cash is there. B money given 1 crore. With that 1 crore also I bought the stock. But that stock is in stock form only.
Yes, sir. Yes, sir.
Listening? That means not yet converted into debtors. Not yet converted into cash. Still it is in the form of stock only. A knocked my door after 6 months. Okay. I will tell that, please welcome. Your money already converted into cash. Take the cash, leave. Over. B came. I said, wait, your money I invested in stock not yet converted into cash. Come after conversion, I said. Will he wait or will not? Therefore, in denominator, liquid liability should not be there. Current liability A should be there. Because current liabilities will not wait for you. Are you understanding or not? That's why liquid liability will not be there. What is converted, that liability only I will pay means they will hit me. Are you understanding or not? Whether you convert that into cash are irrelevant for me. Current liabilities will change or will not change? Will not. You have to pay me 1 lakh mean 1 crore means you have to pay me that 1 crore. Do you understand why liquid ratio, denominator liquid liability will not come? Tell the formula now. What is the formula for current ratio? Liquid ratio. Liquid liabilities by liquid liabilities. So tell me now. Current assets by current liabilities means your current assets should be capable of paying your current liabilities. Current assets what will be there? Total current assets what will be there? Cash, stock, debtors, receivables, prepaid expenses, all these will be included into the current assets. What will be there in current liabilities? Creditors only will be there. That means creditors will wait till you convert it into stock. They will not wait. Everyone? Answer my question. Please see here. I will become insolvent in how many ways? Let us understand. Please see the screen. How I can become insolvent? Or I will do this way. Situations I will write. Better you tell me. First, see there please, listen. Short-term finance used for long-term assets. Short-term finance used for short-term assets, most of them in the form of stock. Or everything is in the form of stock. Short-term finance for the short-term assets and most of them are in the form of liquid assets like cash. Okay na? Who is more solvent, you tell me. First situation. Short-term finance I have taken for 3 months. I invested in a long-term asset. I will be solvent or insolvent? How much is monthly revenue for me? 1 lakh. Means in 3 months how much I can earn? 3 lakh. But how much after 1 month I have to pay? 1 crore. Can I pay na? Cannot pay na? Cannot pay. From where you have to pay? Sell the assets and pay. Asset selling to pay the money is a correct idea na? Sir, I bought, not normally, I bought a house. Okay? Example. I didn't buy like that. I bought in a proper way only. For example, a person having a family members of, for example, in our family there are 4 persons are there. Father, mother and 2 children are there. Say example. Father bought a house. Worth 1 crore. Loan taken worth 1 crore. Asset worth 1 crore. 3 months loan he has taken. His monthly salary is 1 lakh. Monthly salary? 1 lakh. Now tell me. They vacated the rental house. They entered into new house. Okay. Housewarming is also done. Festival type they have done everything. Everything over. 3 months completed. 3 lakhs in hand. Bank manager standing outside the house. Okay. He didn't pay the money properly. What he will do? He will ask you to vacate. Correct?
Yes, sir.
Now tell me. How the money will be recollected by bank?
Mortgage.
What they will do? They will sell this particular asset. Whatever you have given. Correct? Then where you will live? Footpath. Now from this, what is the moral of the story? Company is also coming to the footpath. When? What is the moral of the story? What you learned? If you use short-term finances for long-term investments, you are gone that day. Are you understanding or not? So don't ever, never, ever use it. That's why always I will tell to the people as well. When you are swiping credit cards, you should be very, very careful. It's a current liability. Create a current asset only, not laptops. But our culture is so much developed in India today. Wherever you go, if you put money from out of the pocket, that pain will be known. Credit card, money is not going out from the pocket. Swipe wherever you go. You will swipe like anything. Laptop, swipe. Fridge, swipe. Washing machine, swipe. First point number 1, they are making us fools by doing this. Because you are generating what out of it? Fixed assets you are generating. Washing machine is a Washing machine is a... But you are forgetting one point. Do you know what it is? Out of washing machine, you don't get any revenue. At least if you start a laundry service, maybe revenue will come. At home, what laundry service you will do? You will use for self purposes. Correct or not? Sir, you purchase a washing machine, you swipe the credit card. It is a fixed asset or current asset? Fixed asset. Pony, that fixed asset is generating any revenue to you? No. That means you are investing in such a asset which is not giving you any revenue for you. From that you are swiping. That means from what you have to pay? Salary you have to pay that credit card bill. Correct? You created which asset? Fixed asset. Salary is a current asset. It's a cash. Cash is a current asset or current liability? Current asset. That means you created a fixed asset. Payment is made out of current asset. That means you are using short-term finance to pay the long-term assets. Some day after, he will swipe again. One asset become two assets. Laptop, swipe. Okay, phone, Apple iPhone 15 Pro Max, kidney, sell. Again, 1,79,000 high end, 1,80,000 is the phone cost. From this, what you have to understand, you start going on swiping your credit cards for fixed assets. At some point of time, your asset will reach 1 lakh, your salary is also 1 lakh. Fasak. You are gone. Therefore, don't ever use credit cards. They will make phone calls like that only. Let them die. But you don't take credit cards. If you take credit card and if you are swiping, swipe for certain things which generates income for you. For example, I am a chartered accountant. I take classes. iPad I should have. Okay, to maintain a level of clarity in class, I want iPad. This generates a revenue to me or not? Yes, answer, yeah? Yes, sir. With this only I will take classes, sir. Our turnover is reaching crores every year. Okay, cost is 2 lakh, 1,60,000, 1,70,000. Now tell me, my cost is recovered with 1 month revenue. Not even 1 month, half month revenue, I can cover the cost. Or you understand? Monthly I make 5 lakh rupees. Okay, just by online sale I will make 5 lakh monthly, every month, 5, 6, sometimes 10 also it will reach. So monthly 5 lakhs, if you take general normal online sale, it will make like that for CA final. Now answer my question, my 2 lakh is a worth investment or waste investment? Worth investment, yeah, in a half month I can recover my cost. Clear? That's a current asset creating that's a current liability. For this I can swipe because this is not a fixed asset for me, this is a current asset. Yeah, every day it is generating revenue to me. Clear? So when you swipe credit card, you should understand for what you are swiping it. Even if your parents are doing a wrong, educate them. There is no wrong because finance is ever learned. The moment you die, 1 minute before also you don't know completely about finance. Okay, so therefore point is, let them learn how to disciplinely maintain the finance, because never swipe a credit card for, sir, I want washing machine. Do some alternative. Hire some person who can do that laundry work, pay them. But unnecessarily don't invest bulk amounts in machines which don't generate any revenue. When you have to invest, if you have cash with you, buy them, or else shut your mouth and go home. Are you understanding or not? Sir, I have cash. You buy gold, diamond necklaces, anything you buy. But out of whose money? Your money only you do that. Listening or not? Hello, everyone. Yes, do it with your money. Your money means your earned money, your pocket money. With that only you do. Unnecessarily never take the loans. For unnecessary purposes, you have to take a loan only if that is a last resort. Sir, I will give you one classic example to understand this. I purchased house in 2021, COVID time. Second COVID turn came. At the time I bought a house. Okay, cost is 1.2 crores. Okay, sir. What happened? Hey, listen here. Sir, cost is 1.2 CR. Okay, 1.2 CR. Totally I have taken a loan worth 31 lakhs. Remaining everything I have paid. Completely I paid. 86 lakh, 87 lakhs I paid total on spot. Check I have given, I paid it. Reason very clear. Point number 1. If I take loan, how many years I have to take a loan here? 20 years I have to take. How many years? 20 years. Answer. Do you know how the bank will work? Worst place in the world is bank. I will show you. Which banks never tell you. With this I will close the current asset and current liability concept. Okay, you can understand much better. Bank charges 8% interest. How much? 8%. Sir, 8% interest is a big interest or small interest rate? And a very huge 8% interest. Do you know what is the commercial loans in India? 19, 20, 24. That is a percentage. When you compare with that, 8 is a small percentage, a big percentage. Small percentage of loan. Correct? Yes, tell me. 8 is very small. Now, at the end, you will only tell how small it is. Year. EAI means equated annual installments. What is a written bank one? 8%. PV, CF. Please help me. I have taken how much loan? 1 year, 2 year, 20 years loan. 20 years loan. Listening? Every year I will pay installment called as X, some amount of installment. You know annuity calculation? I told you in the basics. Everyone. Annuity calculation we should use is equal to M plus. M plus. Calculate for 20 years at 8%. I will see how much you remember. How to do? 1 divided by 1.08 equal to M plus, equal to M plus. Like that for 20 years. Fast, fast. Bah, this much slow if you do in exam, that annuity time also will come. Tell me how much? 7 point 9.818 means 82. Say for example. Listen. Have you got the annuity value of 9.82? Yes, sir. 9.82x. 9.82x. Okay. Now listen. Listen, I will explain you how the banks calculate. You went to a bank. You said, sir, I want 1 crore loan. How much? 1 crore. Today everyone is taking that amount of loan for houses. 1 crore loan I want, you ask. He will tell that, sir, you want cool drink, coffee, etc. Because this will become your last coffee, cool drink. You will die anyway in future after taking loan from us. What you want? He will tell that I don't want anything, I want loan. Okay, sir, please sit, sir. We will arrange you loan in just 1 minute. Pre-approved loan. Just to you come sign on documents. You will die later anyway. So we will sanction you loan in just in minutes. We will sanction, which you can never pay in life. You sit there, he will come. Sir, we calculated, sir. We are charging a lowest interest of 8% only, sir. Commercial loans are 16, 18, 20, 24. We are charging as minimum as 8%. FDA 7%. I am just charging 1% extra. Immediately we will think, 7% FDA, 8% loan means, array. So he is charging minimum interest. But the fun you don't know is, Angapar. What will happen? I will show you. So tell me, how much is the EMI? EAI X. We don't know how much it is. Okay. 9.82x equal to how much? 1 crore. 1 crore is the amount given. X equal to tell the value. Tell me now. 10 lakh. 18,000. 330, sir. Anyway, no accuracy. We are not doing any problem. Okay, 330. This is annual, means per annum, divided by 12. 84,000. 860. Sorry, 860. 84,000. Now the fun start. Answer my question clearly now. Tell me. You might have seen so many people saying you, our installment is 80,000 per month. Yes or no? Like this only they will calculate. This is EMI. How much is your EMI? Answer, yeah, 84,000. A person is earning 1,20,000 per month. Okay? 1,20,000 means what he will do? 1,20,000 like 80,000 house, 20,000 provisions and others. Even then I am in a 20,000 surplus. Okay, but you are forgetting for how many years you will do this slavery. Okay, listen, not yet completed. Listen, wait. Tell me, you are paying 84,860 for 1 month, 2 months, over a period of 240 months. Why 240 months? How many years you have taken the loan? 20 years you have taken a loan. So how many years you have to pay this? This will be paid for 240 times. How many times? 240. Answer yaar, how many times? Now answer. 84,860 into 240. That's what you are paying. You are not paying 1 crore. Yes. That's the fun of bank loans in India. Now tell me, how much you are paying? Amount you tell me, 84,860 into 240, how much it came? 2 crore, 2 crore, 3 lakhs. Sir, how much you paid here? 2 crores you paid, correct? Now tell me, how much principal you have taken? How much interest you paid? 1 crore ki 1 crore interest. Means, do you know one point here? See the screen once. You took principal amount of how much? How much? You took a principal of 1 crore, correct? Tell me. You will pay that amount within how many years? Answer. 9.8 years only. That's what the meaning of the 9.82. That's a principal recovery period. In the name of EMI, they will collect back your principal within 9.82 only. That's why we are equating 9.82 with 1 crore. 10.1 years, you are paying interest to the bank. Yes. 10 years you will pay only interest. You are not paying principal back. You are paying only interest. Tell me, what is the biggest scam in the world? Okati bank, rendu insurance. These are the 2 biggest scam places in India which are governed by Government of India. One by LIC, by IRDA, banking by the RBI. Both are 2 biggest scamsters in India. Not India, sir. Worldwide, these 2 are the biggest scams. Scamming, they don't do the scam. We will go and fall on scam. RBI at least should control by educating people. This is what happening. People every day they will call you. All spam calls on a phone. Than known people, spam calls more when you call. Hi Koushik, you are eligible for pre-approved loan of 2 crore. What I can do? Where I should put? So why we need that? But still they will be calling. At least on that government should put a regulation. What people will tell, we are giving interest free. They will not give interest free loan. Okay. After talking, you will understand they are not charging interest. They will tell that first 5 years you need not pay interest. First? Sir, after that, sir? After that, that called as a balloon plan. Enna plan? Balloon plan. That's a very popular in India. How the balloon will be short in the beginning, long in the endings. Correct? Beginning you need not pay anything. Take our money. Suddenly this much EMI will come. Then that normally if you pay, that is better. Those are called as a conduit loans. So what you take now is a conduit, like a pipe. Everywhere it is evenly distributed. Those are balloon loans. Beginning there will not be any interest. Suddenly they will increase a hike in interest rates. And try to understand clearly. EMIs are calculated like this. What do you mean by 9.82? Principal payback period. What it is called as? That means 9 years you paid. That means you paid what? Their 1 crore they paid. What you paid? 1 crore safely you paid them. Over. Now from then whatever you pay for 10 years after that you will pay interest to someone whom you don't know. You will hard earn the money. Every day from morning to night, leaving family members, everyone, you will come and you will work. And you will give to banker, please take, I am a slave to you, I am a kattappa. You order, I will give money. Every month for how many years you will pay? 2021 I purchased a house. Once I felt that I have enough money to pay, 80% of the house money I paid own money out of check. Over. 32 lakhs or 33 lakhs I have taken loan. That loan was also cleared in 2022. Over. I don't have any loan. Happy life. That's why I am very, very happy. Never on my face stress will be there, because the only stress a person can face is financial stress. I never had it, never will be having also in future, because no one can do anything to me. I have my own house. I have my own house, I have my own car, I have my own properties. Who will do whatever to me? Even today, if my practice becomes zero, my teaching becomes zero, happily I can sit, eat, I have agricultural lands, I have my own property, I have my own vehicle, I don't have any loans. Happy. So, being a finance teacher, first I should follow proper discipline in finance. Na? So therefore, any rupee, today if I got 1 rupee, that is a bonus only. I am not earning anything for anyone. I am earning for me, and I am saving for me. My money will be used only by me, not by any bank. I don't have credit card, I don't have anything. Credit cards are there. But if I buy, I will buy from my friends' credit cards. Such that my CIBIL score will not affect. So I will buy from their credit cards, I will pay them every month out of black money. So that anyway will not come under the records. Now you can pay in cash, they can deposit and they can pay. But technically I don't pay anything. So the point I wanted to tell is, never ever use credit cards. Hey, current. You forgot about concept. Never ever use the short-term finances to buy the long-term assets. Especially example, I said credit card, you can easily connect. Okay, so remaining ratios, liquid ratios and other ratios we will see in the next class, and we will complete off. Everyone understood the basics of the ratios? Yes, thank you very much. We will see in the next class.